Hey everybody, this is Ryan Malley with the Stock Market Bubble Update, and what a crazy week it was. I mean, absolutely off the charts. Dogecoin, it's going up to like 70 cents a share, dropping back down to 40 cents. You got Billy G getting divorced. You got employment numbers with a massive miss, and the unemployment number going up from 6 to 6.1%. Big miss. In fact, one of the biggest misses I've ever seen on the employment number. And let's talk about the silent killer out there. You got lumber prices skyrocketing. It's up like 400%. It just keeps going up and up and up. It's like up 24 out of the last 27 trading sessions, with the futures contracts limiting up almost on a daily basis. For the week, the S&P 500 extended its winning streak to 2 straight weeks, up 1.2%. Then you got the NASDAQ Composite down 1.5%, extending its losing streak to 3 weeks. Also, on the same note, the NASDAQ 100 down 3 straight weeks, 1.1%. Then you got the Russell basically trading sideways for a 13th straight week. That's about 3 months worth of small caps really doing nothing. It was up 0.2% on the week. We're also winding down on the earnings season. We just got through the 2 biggest weeks of earnings season. Now the tech stocks, for the most part, are out of the way. You still have some big names like Adobe that is out there, but by and large, the big movers and shakers have already reported their earnings. Let's talk about that employment number really quick. You think that, okay, if the employment number is bad, the stock market's going to tank, but it went up. Why is that? It's because the market likes the fact that a rising unemployment number means that there has to be more Fed intervention. Should the Fed be doing it? No. The very reason why we have unemployment going back up and people not working, and why it was such a huge miss on Friday, is because the US government and politicians and bureaucrats, they won't stop messing with the economy. Just get out of it. Make it a necessity to work again, and people will go back to work. But if you're giving them the Biden bucks and the stimmy checks, nobody's going back to work. 42% of the people who are receiving these benefits are making more money not working than they did at their previous job. Get back to work. You got to get the people back to work, and the economy will recover. But as far as the market's concerned, market likes it because it's free money, just like everybody else. It's almost like a real person. You give it free money, it's going to like it. It's going to appreciate it. And that's what we're doing. We're giving out so much free money, it's going all back into the stock market. It's keeping interest rates low. We need to start tying those interest rates because we're going to get into some massive inflation. Look at the lumber prices, look at coffee prices, soy prices, chicken prices. There's shortages. You got a shortage in ketchup. Fed's got to stop messing around. Politicians got to stop acting like they're the Joker from the best Batman ever with Michael Keaton and just throwing out the money and asking, who do you trust? You still have a lot of weakness in tech. You have stocks like Splunk, like SPLK. They've been cut in half. You have Peloton with recalls. It's crashing. So many of your tech stocks, software in particular, have been hit really hard by the recent selling over the last 3 weeks. And earnings has not saved tech by and large. You have a good earnings report, guess what? The stock sells off. People are like, why would that happen? It beat the EPS, it raised guidance, it had great revenue. Why is it selling off? Because earnings does whatever it wants. It doesn't have to make sense. Most of the time, yeah, when it has a good number, it'll probably go up, but it doesn't mean it's going to do that every time. So you got to basically expect the unexpected. That's why I don't play earnings when it comes to swing trading. A lot of people are frustrated by the lack of action right now in the stocks. That'll eventually change. What the market really needs more than anything is a big sell-off. For one, it'll help us with the short positions, be able to get into short positions and make money to the downside, but it's not doing that yet. Instead, you'll get a little bit of selling, but it'll instantly pop back up to all-time highs. It makes it impossible to short. And so traders are really frustrated because they're just getting churned out of positions right now. But that's part of the market too. You're going to go through these phases. When it starts turning like this, that's when you got to pull back a little bit and say, okay, I'm not going to trade as active until this sideways chop works its way out of the market. And you're seeing that the most right now with the Russell 2000, which has traded for, like I said, 13 straight weeks, and it hasn't really done anything at all. Whereas most of the traders, especially those who are new to the market, have been trading small caps, low dollar stocks, very volatile plays, and they're not doing anything. In fact, if anything, they're more likely to go down in a sideways market than they are up because there's a lack of conviction. So then they hear about all this stuff going on in crypto and they say, holy cow, Doge was just at 1 cent a share. Now it's at 67 cents a share, 68 cents a share. I'm going to go buy some of it right now because everybody says Elon Musk is going to send this thing to the moon. He's going to be on Saturday Night Live. What does it do? It crashes minutes after he starts talking on Saturday Night Live. It goes from like 70 cents a coin all the way down to the 40s. You can't manage risk on this stuff, and people are going to keep buying into it. And there's no real basis for why you get it. I mean, why would you get into a coin that can just print unlimited amounts and think that that's going to continue to increase in value? Just look at the US dollar. They continue to print money, and the value of the dollar keeps going down, 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 and down. You can't expect anything different from Dogecoin. At least with Bitcoin, there's a limited amount of currency that can be created. and not a crazy infinite supply of it. And then you got Billy Microsoft and Melinda Gates getting divorced. And honestly, I don't care. Go get your divorce, go get your big settlement. Nobody cares. I just wish we as a society could also have the opportunity to divorce ourselves from Billy. But we're going to go ahead and get into the S&P 500. I'm going to update you on the T2108 chart that I think is so vital to understanding where this market's going, the VIX, and a couple of other charts. But first, I want to tell you real quick about my YouTube membership channel. It's down below. You click join. It's going to give you access to all of my market research each and every day. It's like 20 bucks a month. That's it. You're going to get all my research on the S&P 500 that I publish each week, the NASDAQ 100, and the Russell 2000. Plus, you're going to get updates each week on the FANG stocks. That's Facebook, Apple, Amazon, Netflix, Google, Microsoft, Tesla, and you're going to get multiple updates each week on my watch list and the daily setups that come from them each and every day. And on top of that, I'm going to be giving you all the most interesting charts that I find in the market each and every day. So check that out. Hit the join button and sign up below. But check out this resistance now on SPY, because this thing goes all the way back to November, and I swear this thing has got its thumb on the market right now. It's pushing it down. Every time it tests it, it ends up selling off. The bulls need to break out of it. It actually sets up well this week to possibly do that, but you can't take nothing for granted until it actually happens. So Monday, Tuesday, and Wednesday are going to be very critical days for this market to really push right through this resistance. But it goes all the way back to November, and each and every time it's tested, it's basically had a sell-off of some kind that's hit the market. But now you've got a nice little consolidation pattern that's gone back to about a month now, where the stocks really haven't done anything. It's found a little bit of support off of that 20-day moving average, and now it's starting to break back out to all-time highs. You need to get tech to follow suit, and you need to get the small caps to finally break out of its 13-week trading range to really push this S&P 500 through this resistance. Does that, we should be off to the races and see a little bit of a bigger price expansion going forward. Now you also have a trend line down below, and it's pretty much parallel with that resistance level that I just outlined. Together you have a nice channel to follow this S&P 500 in going forward. A break below that, that would start to get very bearish. If you break out of the SPY's range from the past month or so, that's going to be bearish too. But definitely a break down below and out of this channel would be the most bearish thing that could happen at this point. And one more thing that I'll point out to you, the 50-day moving average. This has constantly been a launching point for the S&P 500 each and every time it's tested it. So any kind of major pullback, and we're not anywhere close to testing it right now, if that 50-day moving average breaks, that's not a good thing either. So you kind of got the outline here of what I see as the risk in the S&P 500 right now. And as traders, we need to concern ourselves the most with risk and let profits take care of themselves, because if you manage the risk, profits will always take care of itself. Now, check out the T2108 chart. I use it through TC2000. There's a link for it down below, but it's a really good chart for understanding where the market tops and bottoms are, especially when it comes to bottoms. But it also shows you the overall participation in the market by showing you the percentage of stocks that are trading above their 40-day moving average. Now look at this chart. You go all the way back to December, there continues to be a lack of stocks that are participating in the market, kind of like employment. Less and less people are working, meaning that there's a smaller pool of people that are expected to provide all the tax revenue to pay all those people. Kind of like the stock market here. You have less and less stocks that are expected to push this market back to all-time highs. Because look, over the course of the last 5 to 6 months, less and less stocks are rallying with the overall market. And that makes it a much more difficult market, brings a lot of frustration for traders, and creates a lot of big losses if you're not managing those trades with stop losses. Check out the VIX. Volatility continues to drop. You're going to see a lot more of low volume days in the market, which will likely compress the VIX even further to the downside. Maybe we start seeing like the lower teens start to pop up later this summer. And that's because over the course of the summertime, a lot of people are going on vacations and not paying attention to the market. That creates a lot less volatility in the market. Now, check out the Peloton chart. Should I buy it? Should you buy it? Is it a stock worth buying? First of all, I want to highlight this massive head and shoulders pattern. I've highlighted a number of times in the trading block. And this head and shoulders pattern goes all the way back to September of last year. It's a textbook head and shoulders pattern. In fact, if you buy technical analysis books in the future trying to learn how to trade, guess what? They're probably going to have this chart in there because it is textbook. And once it broke that 104 area back in April, the wheels came off the bus. I could easily see, especially as the economy starts to open back up and these Pelotons make their way onto Facebook Marketplace and the Craigslist and all those other things, good chance you're going to see this thing continue to crater because people will be buying them used rather than new. And you'll probably see something around $30 to $40 a share. It's very possible that this one continues to drop harder in the days and weeks ahead. And going forward, the big issue is going to be inflation. Big problem for the market right now. Like I said, lumber, coffee, poultry, ketchup. I mean, there's shortages. There's hyperinflation in some of these areas already, like lumber. It's up like 400%. And a lot of that comes from shutting down the economy, where there's not workers in the sawmills now. You don't have the workers with the poultry and whatever they do to get those chicken wings on my plate. And so there's a huge opportunity for inflation. If you get a big spike in inflation, Federal Reserve can say all they want about not raising rates until 2023 or thinking about raising rates until 2023. You get inflation, they have to raise rates or they risk ruining everybody's wealth in this country. So they have to raise rates at some point. If you enjoyed this video, I'd encourage you to like and to subscribe to it. I provide these videos each and every week. It really helps me to continue to grow this channel. It's like kind of like the currency. It's like the Dogecoin for YouTubers, okay? Likes and subscribe. So that really helps me out quite a bit. And if you have any questions, let me know what they are down below in the comment section. I'll try to get to as many of them as possible. And I want to hear from you. What is your plans for the week ahead? Did you get into the Dogecoin? Did you play that Saturday Night Live craziness? Or did you just watch everybody else faceplant on themselves thinking that Dogecoin was going to $1 following the SNL skit? Let me know down in the comments below. And happy Mother's Day to all the moms watching this video. And for those of you guys lucky enough to have your mom around, make sure to give her a big hug. That's one of the things that I still wish I had these days, is my mom around to give her a big hug on Mother's Day. Thank you guys. God bless.